Today, we will talk about ICT optimal trade entries, OTE. This is gonna be a Fibonacci series, one technical teaching, one example video. And in the next videos, I'll talk about rule-based reverse Fibonacci trading. Today, I'll explain how I especially use it, which price levels that I look for before trading, understanding the logic of supply, demand, premium, and discount zones, how to determine the best entries, what else that we should be looking for before trading with Fibonacci. If you're ready, let's start with Fibonacci tools. I'll also publish study documents on Google Drive for free if you are interested. Now let's start. Okay, optimal trade entry, also known as OTE, is an extremely simple concept to learn. However, I do not suggest you to use OTE alone. It is like an additional confirmation besides other price action concepts like order blocks or imbalances. Now, every trader I saw has their unique methods and specific Fibonacci ranges that they use. In this video, I'll talk about how I use it, how I set levels, how I set stop losses, and how I set targets. There are so many names for this. Golden zone, magic Fibo zone, everybody gives it a name. Again, names do not matter at all. But before that, let's understand how it works. Let's check out break-off structure and Fibonacci first. It is an extremely powerful tool to use with break-off structures. Once you identify a strong break-off structure, then you can use the Fibonacci retracement tool from the low point to the high point. Of course, you should be completing your high time frame and low time frame analysis and get a market direction bias first. What I teach here is the basics. My entry zone area is between 70% and 80%. Again, this is the way I use it. Every Fibonacci trader has their price levels. The other common uses are 0.618, 0.705, 0.790. What matters is the premium and the discount zones. These 0.6, 0.7, and 0.8 are just numbers, nothing else. We need to focus on the meaning of supply and demand areas, which I'll explain later on. It's not just a break-off structure. You can easily use the magic Fibonacci or optimal trade entry with the market structure break. It's all the same idea. You mainly focus on strong and really high quality market breaks, so you can avoid false breakouts. Later on, you draw the Fibonacci retracement tool from low end to high end and wait for a pullback to your entry zone. Let's talk about my settings. As you can see on the screen, I use round numbers because I don't want to see the clutter of those floating numbers. I also use 0.2 and 0.3 levels to take partial profit. Because in my trades, I usually take partial profits and secure them. Again, what I teach in this video is how I use the tools and trading styles. Okay, let's see this example. As you can see, the asset is in a nice uptrend and keeps making new higher highs. You can easily notice the strong and high quality break-off structures. So, how do you use the Fibonacci tool? So draw it from the most significant low to the most significant high. As you can notice, price pullbacks to our golden zone before a reaction. Of course, using only a Fibonacci tool is not enough to trade. We will check it later about how to improve our trades. Now let's check out market structure break based example. As you can notice, we are having an extremely powerful break. Nice big red candlesticks leaving imbalances behind. So draw the Fibonacci from the significant high to the significant low and wait for the price to retrace to your golden entry zone, which is for me between 70% and 80%. And one more time, Fibonacci is not a trading tool that you can use alone. You have to check high time frame magnets, any imbalance, equal highs or lows, other liquidity areas. high time frame market direction, high time frame liquidity targets, high time frame imbalance targets, quality of breaks, MSP or both, other supplemental price action setups, and so on. Okay, I want you to forget all the numbers. Nowadays, everybody has different Fibonacci numbers. Let's focus on the general meaning of the Fibonacci, the bottom and the upper parts. The midpoint of Fibonacci is considered a balance or equilibrium point. The upper part is considered premium zone, and the bottom part is considered discount zone. So, what is the idea then? Again, a simple supply-demand issue. In the premium area, price becomes way too expensive to buy. This is a place where early buyers take profit. In the discount zone, price is becoming more balanced, and this starts to attract new possible buyers without paying a premium price. I hope it clears a bit. Let's see a real-life example. I want you to imagine your city, and in your city, the average house price is $200,000, and you have one house already, and you are thinking of buying the second house. And now interest rates drop, house prices suddenly jump. The average house price suddenly jumps from 200K to 250K. Now, would you buy a new one for $250,000, or would you sell your existing one for $250,000? I leave the answer to you. And after a while, prices suddenly drop with a burst of the housing bubble. Now the average price drops to 150K. Would you buy a new one for 150K, or would you sell your existing one for 150K? Of course, trading is not this simple. However, the supply and demand idea is simple. All these are just guidelines for us to make educated trading decisions. Okay, let's learn how we can support the Fibonacci trading. The first thing you need to consider is the high time frame market direction. Are we making strong higher highs or low lows? Are the global conditions supporting our market bias? If there is a market structure break, how powerful it is? High time frame magnets, any imbalance, equal highs or lows, other liquidity areas, pulls the price. So the first thing we should focus on is high time frame market conditions and overall price bias. The second thing is the quality of the break, both or MSP, how powerful it is, and can we measure its quality? How much energy does it have? The size of imbalances that it leaves behind. The third thing that we need to check is our golden entry zone supported by other price actions? For example, imbalances, breaker blocks, order blocks, Quasimodo, SR flips, anything, any other price action to support our decision. Best entries. Of course, the best possible entry is, again, confirming the entry with a low time frame micro market structure breaks with imbalances. I do not even have to repeat it anymore. You understand the importance of it. How about stop losses? The best possible stop loss is under the most significant low. It will be a large stop loss, but it will give you room to breathe. The second ideal stop loss is that you can find it in the low time frames with micro order blocks or breaker blocks. Now the targets. What I like is this. I take a partial profit between 0.2 and 0.3 and move my stop loss to my entry. This way, I secure the trade and the profit. The second possible target is the significant high point where the liquidity waits for us. Again, this is my trading style. You do not have to follow me. You can create your own methods. Okay, let's see a real trading practice with the combination of high time frame and low time frame analysis. Okay, what is happening here? This is a liquidity operation, as you can see. The price clears the liquidity from the previous significant high and strongly breaks down. I forgot to draw the break, but it is obvious, as you can notice. This is an equal low, also known as the double bottom pattern, in which so many beginner traders place their orders and stop losses. Just notice, equal lows and highs are price magnets. I'll cover all liquidity concepts in the future. As you can see, I draw my Fibonacci from the significant high to significant low to determine the golden OTE zone. Now, as you can see here, I do not rely on OTE. Never rely on OTE alone. You have to supply it with other price action systems. Please remember the layer system. More structures are stronger together. Okay, let's go on low time frames and find the best entries. Now let's see it. Do you remember how I keep saying the price is drawn to two things, liquidity and imbalances? Equal lows are the easiest way to determine price bias. Price is always drawn to them to hunt the stop losses. Now, what I do here, finding the same price action setup with both high and low time frames. As you can see, high time frame, order block, imbalance, and OTE. And low time frame, order block, imbalance, and OTE. Okay folks, this was a short cover of trading with Fibonacci. In the next videos, I'll show you more practical examples. I hope that you are improving really well and practicing a lot. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon.